Hello guys, what's up? This is the Complete Trader, and in this video guys I want to share with you a couple of things that you need to understand. And I'm also going to be showing you two trades that I took this week, okay, and they are still running. All right, so I was talking to some of my friends on Sunday before the market opened, and I was looking at certain things. I was looking at actually at the money markets. Those are things you're going to learn when you get into my course. So I was looking at that, and I was telling them that I'm expecting to see GBP USD falling. Okay, so that means I'm expecting to see the US dollar appreciating against the British pound. All right, so now there are certain things I was looking at that made me to say that. Okay, the beautiful thing about trading that way, having that kind of understanding, is that um, when you have such an understanding, it defines for you the direction you should be trading when the week opens up. Okay, so you're not confused as to what to do. All right. Now, when you trade in price action, you can actually find the system like using break of market structure on a higher time frame to get a direction, but establishing an economic reason why you expect the currency to increase in value or reduce in value is even much more powerful than just looking at break of market structure and all of that stuff. Okay, but when you combine price action and paying attention to economic factors that determines or that causes price moves in the market, then you have a very powerful strategy, and that's what we do. So, but this right here was one of the trade NZD USD. So what I'll say is that this week I was just buying the dollar. Okay, in other words, I was expecting dollar to gain strength, and that is what we have seen so far, especially today. So especially on Tuesday, I should say. Okay, so because I don't know when you're gonna get the video. So this is NZD USD, and it was a very simple setup. Okay, so we had a break of market structure. Okay, round around here, and we have price come back to retest that order block level right there. Okay, so and then we see price dropping all the way down now. So initially price stop loss was above, and then now we've had this large movement of price, which is about 70 pips, and this was a move that actually happened today. So 70 pips, and the trade is still on. So let me show you the GBP USD trade. So here is the GBP USD trade, and it's a very, very, very powerful setup. Most of the things that I've taught you guys right here on this channel was used in looking for this setup. Okay, so I taught you guys about liquidity pools and all of that stuff. This line you see here is showing us the high of the previous week. So we see how price ran into the high of that previous week, taking liquidity. All right, so we took liquidity right there, and then we had the breakdown in price coming back down. So this created an order block level where we can trade from. So you can see that area there I marked, right? And that was a valid order block because we had a break of market structure. So we had break of market structure around these levels, and then we have price return back into that area, and that was a very good trade. So that was a sniper entry, guys. These are stuff that you get when you are in a program. That order block concept I've taught you guys here, liquidity pool I've taught you guys here, break of market structure, you already know that. So it's a very simple idea, and that was the trade. And so we can see what has happened today. This is over 120 pips, guys. 120 pips. Now I want to say something very quickly, even though I'm going to make a new video that will actually talk about this in a little bit much more detail. Okay, so there are only five things that causes market to move, five things that causes price to move. Okay, and you can go online and search it. You can find it, you can check it on YouTube and everything. You can't really find how to work with these kinds of things because they are not there. So most of these things are not there. All right, so the one first of all is the interest rate. Okay, so interest rate, this is what you have the big investors chasing all about and all of that stuff, and there are things that you can look at that tells you what is going on with that and where you should be putting your money into. Okay, and then there is another one, inflation. Now inflation, lots of people misunderstand this. Now I've seen this a lot in groups where you see crypto traders talking about crypto being an inflation edge and all of that stuff. It's just because they don't understand what is happening, or they don't understand how to work with that idea concept of inflation, because some of them are saying that we have inflation right in the global economy and crypto is still dropping. They don't understand why that is happening actually. All right. And the idea is very simple. So in another video, guys, I'm going to share much more light on all of these things. And then you have the dollar effect. Okay, the dollar effect. The dollar is the benchmark currency for the world, and it is the number one reserve currency. So it plays a very big role when it comes to international trade and all of that stuff. And so dollar is a very big guy in the market. So when the dollar is affected, you know, all other currencies are going to be affected as well. So when whatever happens to the dollar, you will see other currencies reacting, okay, to that also. Okay, so inflation, interest rate, dollar effect, flight to safety. Okay, so flight to safety is another one. So flight to safety simply means that the fear of losing money is now greater than the desire for traders to make money, and so they are fleeing to safety, trying to shelter their wealth from the risk. Okay, so when risk rises to a level that is not a level that the traders can actually take, so they want to run into assets that will offer them safety. All right, so that is the number four thing that actually causes big flow of money within this market and causes currencies or assets to appreciate or depreciate in value. And the fourth one is price action. Okay, price action. Here you have concepts like premium, discount, imbalance. You have um, these kinds of things. Okay, so that's where you have all of those things: so premium, discount, imbalance concepts. Where we talk about fair value gaps, so on and so forth. Those are things you get to learn in my price action course as well. So those are the five main things. Okay, five main things that actually causes real movement of price in this market. Okay, so I'll take that again. Number one, inflation. Number two, interest rate. Number three, dollar effect, flight to safety, and price action. Price action. Okay, so these are the things you need to understand if you want to be a master in this game. Okay, you want to be a master in trading. The more you understand these things, the better you will be at predicting market moves. When you increase your knowledge, you also reduce your risk in this market. Okay, because ignorance is risky. Okay, ignorance has the kind of risk that it presents to you. So in trading, the more you increase your understanding, the more you increase in your understanding of the business, the lesser your risk is. Okay, the less risky the market is to you, the less risky trading is to you. You see, the market moves up and down and everything, so on and so forth. You know, understanding is what makes you know the direction you should be trading. Now, it doesn't mean that you're going to be 100% correct, but you understand that from all these informations I've gathered, this is the direction I'm expecting price to go, and you're going to stick with that. Okay, and then you also know the time that you should be trading. All of these only happens when you have understanding. Okay, and you're not just like any other trader who is just trying to gamble in this market, because you see some people are just gambling. I mean, as a matter of fact, 90% or 95% of traders in this market are gambling because they don't even know what they're doing, and that's a fact. Okay, you don't even need me to tell you that. You can see that all over the place, right? So there's a level of understanding you get to, you are going to become much more comfortable with this stuff. Okay, so but I want to say to you guys, never stop. Never stop. There was a time that I never knew anything in this market, and I tell you that I did not even know what Forex stands for. Okay, there was a time I did not know anything in this market. um, but right now I have so much understanding about it, but that was because I never stopped. And let me tell you something, guys, I still study every day. I still study every day. One of these days, I'm going to show you guys my library, um, my digital library. That is what it is. Okay, so I'm going to show it to you guys. Just going to scroll down and show you the books that I'm looking into, um, courses and everything, and then you go and see that in trading. When we talk about learning about trading, it never stops. It never stops because the more you learn, the more you know, and the more you know, the less riskier this thing becomes. And if you understand something about risk and reward in this business, you understand that it's like a coin with two sides. So when you reduce risk, you increase your reward. That's how the game is. Each time your reward increases, your risk has also reduced. Okay, if your reward potential increases, risk reduces. So one way to reduce your risk is to have understanding. So this is why I keep saying that. So never ever stop, guys. So that's what it is, guys. So in another video, guys, I'll be sharing more light. But for now, enjoy your week. Cheers.